Okay. All right. Um, right. So tonight's session, or tonight's second section, technically, is going just to be a repeat of what we actually did earlier. So if you were present at the previous session, which I think was around 7:15 or something like that, then is really no need for you to be here, okay? Unless obviously you didn't catch what we were doing properly in the previous session, because it's just going to be the exact same thing that we did a few hours ago. However, if this is your first time logging in today, then by all means, you're welcome. And basic housekeeping rules for those guys who are new to these sessions. There really is just one or two basic housekeeping rules, which is number one, everyone is on mute, okay? So everyone except for me. And the reason is there's a lot of background noises, all right, where some guys are watching TV while they're attending the sessions, some guys are just at work and all of that stuff. So there's a lot of background noise. And once we record these sessions and put them up on the channel, the background noise can distort the message, you end up not hearing anything. And that's why I have everyone on mute. Okay. Now, secondly, if you have a question, you can either type your question or you can raise your hand. I'll unmute your mic. You will be able to speak and ask whatever question that you need to, and then I'll respond to you while you are still able to speak, basically. All right, we'll have a conversation and then I'll put your mic back on mute again. Okay. Right, so if guys can hear me as well as see my screen, I'll proceed with the session today. The time is about 9:20, right? 19 minutes past 9 to be exact. 21st day of January, right? First month of 2020. All right, let's make it an interesting one, guys. So for the past couple of weeks, except for last week, we've been having sessions consistently. And one of the main things that have been looking at has been actually how the markets actually respond when it comes to candlestick patterns. Okay, so essentially what that means is how do we take candlestick patterns, interpret them, and use them for high probability trading. Okay, because that's what the markets really are, a place where we want to sort of like leverage off the high probability trade setups, basically, okay, and make more money than we do lose on the setups that actually don't work out, okay, because there is no real way for you to get around any losses, right? As much as you might try and avoid that as much as humanly possible, as I do believe it's human nature to avoid losses. But I mean, they're unavoidable in the markets, and it's preferable that you take very small ones, and the wins are significantly larger right now. If the wins are more frequent as well than the losses, that's even better, meaning you have a high win rate. Okay, so you might be winning $200, for example, on your winning trades and losing $50 on your losing trades, and winning 80% of the trades that you actually take. Now that in and of itself is incredible, and you should tap yourself on the back if you can consistently do that, because that means you can make a consistent income. I mean, I can put you literally anywhere in the world. If you can produce those types of numbers on a consistent basis, I mean, your life is set. So right now we're looking at the Euro CAD. Okay, let's just drop it down to one of the higher time frames, because that is where we usually, the higher time frames tend to give us a bit more significant support and resistance levels as opposed to the lower time frames, right? And it's much more easier to see than if you just zoom in into the chart. It's sort of like the same. It's much easier to see. It's difficult to see the forest from the trees, okay? Meaning if you are part of the forest, okay, if you zoomed in, right, and you only see one tree, right, you're standing next to one tree and you're in the forest, it's very difficult to so that I comprehend the splendor of the entire forest, as opposed to someone who's standing further down, right, at the bottom of the hill, right, admiring all the trees and whatever else that they can actually see. So you can just use that as a sort of a way to look at how the market, how you can interpret the market. Okay, the more you zoom in, the less, the harder it is basically for you to interpret what is going on in the larger picture, right? Just always keep that in mind and try to check down whenever you're doing those check downs or doing analysis. You need to drop down from the high time frame. So we're talking exclusively about support and resistance levels and how we then tie those in to these zones that we actually do see on the chart, right? You see this 14700, 14800, 14900. Those are the big figures. We did that, I think it was the previous session that we did 2 weeks ago. Yeah, I think it was 2 weeks ago. And the recording should be on the channel. And I think the link to that video should also be in the Telegram channel. Now you can see on the EuroCAD, we had this bounce off the 145 zone. Okay, market pulled up, right? Popped above that 174 even, okay, popped back down again, right? Market did close below 4450, okay, there's 4450, and then pulled back up again to that swing high at 4700, and then pushed up again, right? That 4700 sort of held, okay, if you're looking at the weekly chart, okay, that 4700 zone did actually hold, and this is just a minor sort of like consolidation in the bigger scheme of things. Now, if you're looking at this on the lower time frame, okay, it seems like the market was trending, there's a extreme fall to the downside, but as soon as you move to that higher time frame, okay, this was 190 pips, okay, I'll take 190 pips on any given day, even on a Sunday. So if you break down, or if you rather scale up to the higher time frame, you get a better sense of what is going on within that particular market. So that's where you need to start off. Now, a lot of the times you're going to have these support and resistance levels around these psychological support and resistance levels, these 140, right, 4500, right, 4600, and that sort of like adds another layer of, I can say, confluence, which means that it does produce a higher probability of the actual trade working out. Okay, it does add to the probability rather of the trade working out. So we like to take those ones that actually sort of like are in line with the big figures, but it doesn't necessarily mean that we can't take solid support and resistance levels into consideration that are not aligned with the psychological level. Okay, so if, let's say, for example, we decide to remove this, okay, let's say we decide to remove this, and all we're working with is just a clean chart and a moving average. We go about our normal business in identifying a support and resistance structure by looking at an area which does seem like there's been a lot of pullback around that area, or the market was rejected around that area. Okay, you can see from here, boom, the market pushed up, came back to that same zone, and the market pushed up again, right? And since I think around 2017 in April to August, okay, the market hasn't come back and closed below that zone, right? That 14500, okay, we just round it off to 14500, exactly where the market is. We can see that the market has not closed, okay, below that zone on the weekly time frame. So this also, it does help that there is a bit of a gap over here. Okay, it does help that there was a gap somewhere around here, which obviously says there was a lot of buying at this zone. Okay, now this does happen a lot, especially when it comes to indices and other less liquid markets, where you have these large gaps, even while there is actual trading, while the market is actually open, I mean. And there's so much volatility, or there's so much orders, there's so many orders coming into that area, maybe buys or sells, whatever the case may be, that it seems like there was no trading for about a minute or 2 minutes or a few seconds, and the price just one candle closes here and then the next candle opens there, So that does usually happen, and that is a strong indicator that if the market does come back around that area again, so if we do see a return to that area, right, if we do see the market pull back into that zone, then we are very, very poised for a continuation, especially if the market is trending in one direction. Okay, so if the market is trending up and we have a gap to the upside, the market pulls back in, right, as is the case with this euro CAD on the weekly time frame, then we can safely assume that there's a huge possibility that the market will continue on the upside. Okay. So, right, whether you trade it or not, that's not the most important thing, or how you trade it, that's not the important thing. But right now, we're just learning to identify these levels. So when they do present themselves, you are in a position to say, should I enter or should I stay out? Okay, because these can also help you in staying out of positions that you were going to take. Because let's say, for example, on the Euro CAD, if you were looking at the 15-minute, for example, right? Looking at the 15-minute, okay, this looks like a downtrend, right? And we're looking at shorting the market. Let's say we wanted to short the market yesterday, okay? Say we wanted to short the market yesterday, which was Monday, and we short the market somewhere around here. Now, naturally, if we're looking just on the 15-minute time frame, or even on the 1 hour time frame, it's very difficult for us to say, okay, let's get out the market now, because if you just look here, there's a lot of space that we can see that the market can come down to. Now, if you're looking at the daily, you can see that there's a previous structure, right? A support structure where the market has rebounded a few times already. It comes to that 14500 level and it pulls back, comes back down to that 4500 level, might extend it a bit, 50 pips or so, but goes back up again. Okay, so that 14500 zone is actually holding up quite significantly. So therefore, if you are looking to become a short seller around that area, there is a huge possibility, okay, that the market could just go back up, because this market is still in sideways, in a sideways sort of range. Okay. Right. There's no real trend to this market. The market is moving sideways. So we see a pop below and a pop above. Market pops below and then goes back above. So the market is just moving sideways, and therefore what we want to do in this sort of scenario is you will want to employ or to have a strategy that is going to take advantage of the highs, shorting at the highs, or buying down at the lows. We don't want to be trend followers so too much when it comes to markets that are ranging sideways, as is mostly the case with the markets. So if you're looking at currencies especially, a lot of the time the markets will be sideways, they're going to be ranging, and then about 30% of the time probably you're going to see the market move in a unidirectional swing, which means it's going to go down or it's going to go back up. And then it goes back to that sideways range. And then after that 70%, for example, then you're going to get the market moving down again. Okay, so now what you want to take a look at, is those levels as sort of like your guideline, right? Now this will then keep you out of this trade, or if you are going to get into this position, you're not going to get into it on a long-term basis. Okay, we're not going to be shorting around that 14500 16 zone, right where the market is, expecting the market to drop 300 or 400 pips to the downside. Okay, the most easiest or the most sensible thing to do rather would be to patiently wait for a breakout to the downside, a retest of that previous support structure, and a continuation of the move to the downside. Okay, so that would definitely be a bit more, I can say, appropriate, or something that would be more favorable to do, as opposed to just shorting the market before it breaks this very strong, right? I mean, obviously it's strong. The market has been rebounding. Boom, you can see here, 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 and I think, is this December? No, this is probably January, beginning of January, second day of January, most likely. And the market rejected around that same area again. So there's a possibility that the market could swing back up to the upside and do more or less the same thing it's been doing around this 4,700 zone, and then pull back down again and do the same thing. I mean, there's nothing stopping the market from doing that. So we'd like to see something a bit more solid in terms of a breakout, a candlestick break to the downside, which is where candlestick identification or candlestick patterns identification is important, where then we can identify that firstly there's a breakout to the downside after a ranging market, and then there's a rejection candle which confirms that the market is moving to the downside. Okay. Any questions so far, guys? Let me clear this up. Okay, no questions. All right, so now if you're looking at, that is an instance where we're looking at support, right? And same thing would apply when we're looking at resistance, for example. Okay, let me just check a ranging market or something like that. Okay, let's use this one. Okay, let's use the CAD CHF, I think. Okay, yeah, this is ranging quite nicely. Now, if we're looking at this, this is on the weekly, right? This is on the weekly, this is a CAD CHF. And firstly here, you can see this high. Okay, let me just use my horizontal line. This was the beginning of 2019, just a few weeks in. We had this high at around 7,600. Okay, also a round number, somewhere around there. Okay, market came in, retested that high multiple times during the course of the year. 1, 2, 3, 4 times during the course of the year. Okay. Now this is what we term then as a strong resistance. Okay. Now the more times that the market comes back to that resistance area, okay, the more times the market comes back, let me just get my goal tool. The more times we see this, okay, the higher the chances that the market will eventually break out and either retest or just move sideways for a few candles, and then, because that also does happen, right? It happens to me a lot. With the market, you're expecting the market to break out of a range, and it actually does that, right? It does exactly what you anticipated when it comes to the breaking out of the zone part, but then it just moves sideways for a few weeks and then just, goodbye. I mean, you don't see it again. There's no pullback. There's no warning, and then your buy stop is just sitting somewhere around this 7600 zone, and your take profit is there, and you sit there and sort of like imagine how much money you would have made with the trade had it first pulled back into that zone. Right? Essentially, you were right on the direction, but if the setup really doesn't play according to your game plan, it's not like winning a game by luck. And you don't want to win a game by luck because you get delusional and you start thinking that, I mean, you're too good. So what you want to do is allow the market to come to you. In almost all cases, there's very rare occasions where you can actually spot when a market is about to sort of like take off. But I mean, just like with anything else, you just need a bit more experience in identifying that. But the most important thing is if you're expecting a retest of this high, and that will complete your trade setup, right? So let's say everything else is in check, right? Let's say you have 4 things that are pointing to an upward swing on the CAD CHF for the next couple of weeks, right? Then there's only one thing missing, and that one thing is sort of like it has a high score rating. Because I do believe that when it comes to candlestick patterns, they are number one. Okay, so if you can identify candlestick patterns, or you can identify everything else rather, and you're struggling with candlestick patterns, I mean, a lot of the times you're just going to get into positions way too early. Okay? You're going to miss out on trading opportunities, and overall, you're just going to have a tough time because that is one of the parts that is very important to actually understand, because those are the tools that give us a really good idea of what has been happening in the market. Okay? And like I said, when it comes to the our brains are designed to look for patterns. Okay? Whether we like it or not, we're going to see patterns. We're going to see patterns repeat themselves over and over again. So it's important to always keep that in mind. So this retest of this 7600 zone, let's say we plan this, let's say 3 or 4 weeks prior, and the market just breaks above, comes back in. Okay, let's say we're expecting the market to bounce right off the 7600, and it just takes off from there. It doesn't come back to that 7600. Now, you followed your game plan in that you said, this is my entry, the 7600 zone. And since the market didn't reach there, you didn't take the trade. Now, the issue is, if you do take it, here's what's going to happen, right? Let's say you take this right over there. Okay, it wasn't your plan for you to take it, but you actually did kind of have a feeling that the market was going to go up without pulling back down to where you wanted to get in. Now, if that is the case, the next time, right, sort of like what I said earlier, if you win a game, let's say soccer game or something like that, purely by playing luck, because back in the day I used to play FIFA a lot with a few friends of mine, and every now and then we'd have this new guy coming, right, and he'd have 1 or 2 of them would have a very spectacular first game. Okay? And for some reason, after they win, right, they might win 2-0 or 1-0, whatever the case may be. I mean, they became sort of like big-headed, and they thought they actually knew the game. Right. Now, we'd been playing it for a while, and we knew, I mean, this is sort of like beginner's luck, but it's very difficult to take someone off that, especially if they were right about something that was not supposed to work out. So if a setup that was not supposed to work out for you actually works out, that was the worst thing that can actually happen. So in this case, if you see the market pulling back and you jump on it, right, the game plan was to get in the 7600 and you get in at 7702, and it actually pays you some money, that's the worst thing that could actually happen, because it teaches you that if you do the wrong things by not following your plan, you can also make money. So if you do that, I mean, it sort of becomes a habit. And sometimes what will happen then is you might get in again in the next setup, something identical to this one. You buy, boom, right over there, and the market pulls back in. Okay. And you're like, all right, let me jump on this one again. And as soon as you jump into that trade, the market pulls back down, takes you out of the trade, okay, by hitting your stop loss. And right where you were supposed to have entered, that's when the market will go up. Okay. I know this has happened to a lot of the guys who've been trading for quite some time, right? You eye a position or an area that you want to get in, and the market looks like it's going to run away from you. Let's say the previous trade actually ran away from you. Okay, the last trade you looked at went right to where your take profit was going to be, so you're a bit anxious. It goes right. You see 2 or 3 candles going up, right? And you're like, okay, let me wait. I'm just waiting for pullback, market to pull back down a bit to that 7600 level. And I mean, watching the markets like this can make any person anxious. Yeah, I do believe it's human nature. It's not anything, we can't change it completely. Okay? We can learn to manage that emotion, but we can't change it. We feel anxious, right? We just want to jump in. Okay, we just try and avoid looking at the markets, but eventually we open up the chart again and we see it's sort of like running away from us. And as soon as we click buy, it goes down. Boom. Stop loss taken, boom. And let's say you're like, okay, maybe I'm wrong on this one. And as soon as you figure, okay, maybe I'm wrong on this one, it goes in your direction. So it's always important then to wait for that setup to actually develop. Okay, that is the advantage of allowing the market to actually come to you, and that is the major pro of using candlestick patterns, because then we can have something visual we can actually see that will make sense for us in terms of making a trading decision. Okay, because I mean, you can always make decisions of stuff that you can't see, right? You can make decisions of feelings. You can make decisions of what someone else has said or a chart someone else has posted. You might not understand a chart that the person has posted, and you might take a trade. But with something that you understand, it's a bit easier for you to be more confident in that position because you understand why you took that trade. So that would be how you'd play a structure on the resistance side, right, the resistance level, into like a new trend. Now, the basic or the most important thing about taking a breakout, because this is essentially just trading a breakout, is that it does allow you to take trades in line with where the market is actually going to trend. Okay. Not sure if I'm making sense with that one. If the market is ranging sideways, for example, you know that the probability of the market to continue ranging sideways is still there, it's still high. But if the market breaks out of a range, because it's like, let's say the market does this, it moves sideways, it's going to break out onto the upside, and then it's going to move sideways again and breaks out. So you want to be involved in these movements. Okay, let me change the color of my pointer, right? So this is the trend. This is the staircase type of movement that we're gonna see. We don't want to be involved too much in these ranging markets, okay? We want to be involved in these, right? We're gonna potentially make more pips and more money if we are more involved in these types of movements as opposed to these short-term sideways ranging markets. Because a lot of the times as well, that's why a lot of people get caught out with the false breakout. Okay, false breakouts usually occur during ranging markets because the moving averages are crossing over and it looks like the structure is broken, right? Let's say the low of the day is being broken or the low of the year is being broken, but the market pulls back away, which is why we wait for the market to clearly break out, then come back to retest that same area, which was previous year's sell area. Okay. Okay, guys. Do you guys have any questions?
Yeah, I do have a question, sir.
Okay, I think we have about 8 minutes left, and yeah, I think there's about 8 minutes, about 45 minutes left. So I will be ending off the session here. Okay. Right, so what I'm going to do, tomorrow we're going to have a session that is going to be for the beginners. So if what I was talking about today didn't make any sense whatsoever, then you probably should be with the guys in the beginner sessions. I did post a link to the YouTube videos. Okay, so I posted a link to the YouTube videos. I actually did a playlist of some of the more important beginner stuff or beginner content that you can actually go through and watch. Okay, now I did post, I think it was a few weeks ago, probably sometime late last year, I posted a poll which asked the guys a few questions on what they'd like me to offer in terms of helping everyone just to make some money. And obviously the one most important one seemed to be the coaching, the one-on-one coaching. And secondly, it was the signal. So what I've decided to do is I've created sort of like a small group. There's only going to be 5 guys in there. Okay. In that group, right, I'm going to be taking 5 guys like each and every single month. Right, we're going to start off the month together, which means everyone's just going to come in during the course of the month. Okay, this EMA is the 200 moving average. Okay, I can, if you look in the PDF, right? There's in the PDF with the strategy, you can just check on the moving averages, but it is the 200 moving average as well as the 800 EMA. Okay, so it's a exponential moving average. Yeah, it's exponential. Okay, so just check on the PDF, and I do believe that I did post the link to that as well on the channel. The video is actually titled "Moving Average," I think. And yeah, for every single thing that you might not be certain of, you can just post it there, or you can. I know I don't respond timelessly, but I eventually do respond. So you can also ask me offline after the session or something like that. Okay. But that's the 200 moving average, as well as the 800. Those are the ones that we're going to usually use. But so, as I was saying, yeah, we're going to do signals as well, right? We just recently started that, and I mean, it's been going okay. And we're going to be taking a lot of long-term positions, right? So 300, 400, 500 pips types of trade, and we're going to take a few scalping short-term positions there. So if you want to also become part of that, you can just let me know. But for the one-on-one sessions, it's probably going to be like a 45-minute thing where I do some okay, I mean, right now we're not going to be doing that. When it comes to continuation patterns, if there's no pullback, that's not essentially what we're going to be doing now or what we were covering today. All right, so today we're just focusing on a scenario where there actually is a pullback and the market comes back into a zone where we actually want to take. Right. If there's no pullback, it's very difficult for you to see whether the market is just going to continue going back up or it's just going to pull back down again, right? And you're going to be dragged down with it. So I always say start off with a pullback. If you become proficient, or when you become proficient rather, then you can also take a continuation that really doesn't have a pullback. Okay. Okay. All right. No problem. So as I was saying, yeah, tomorrow we're going to be having that beginner session. I do believe that we're going to be in module 4 for tomorrow, and signals I'll be sending through a Telegram link. You can click on the link. It's going to take you directly to the person that you actually need to speak to. When it comes to the one-on-one sessions as well, right, I'll send through a link for that. It's going to be 2 different links. And I did mention that we're going to be taking up the copycat trading minimum. So copycat trading is basically where you open an account, you fund your account, and you link your account with mine. And when I trade, it copies the same trades as me and stuff like that. So that's going to be raised from 100 US dollars to 1,000 US dollars. Okay. And for guys who just have small amounts, anything below $1,000, they'll be able to just gain access to the signals and just follow the signals on a day-to-day basis. I think I send about 5 to 8 signals a week, right? And a mixture of short-term as well as long-term trades and stuff like that. So it gives you the entry, exit, and I did post in the Telegram channel the PDF where it actually tells you if you have this size account, this is the largest lot size you can actually use, because that was also a question that I've been getting a lot. So I designed, it's not like a table where your lot size should be X amount if you have this account size. Like you shouldn't really exceed that, because you don't want to be stepping into some very dangerous territory. Okay, $100 to $1,000 in. Okay, that is basically going to be, probably we're going to do that in the next 2 weeks or so, right? So we're going to be, I'll make an announcement though in the Telegram channel, but I think in the next 2 weeks or so, because this is probably like the second last week of the month. So I think around the beginning of February, we should be at $1,000. All right. Okay. So I'll send, I think we have less than 1 minute left. I'll send the relevant links in the channel. Okay. I'll send through the relevant emails. I'll make sure everyone gets the emails. If you don't have the PDFs, just go back in the Telegram channel as well. Just watch a couple of the videos that you find appealing, interesting, and just sort of like immerse yourself in the material. If you do have any questions, just let me know. And yeah, hope you guys enjoy the rest of your evening. Okay, thank you very much for coming through for our second session for tonight, by the way. And I'll see you guys. I'll see some of you guys tomorrow at the beginner session at 7 p.m. Okay. Cheers, guys.